Ryzen helped AMD regain credibility, but the data center was the market that could truly change the company's future. Data center customers are very different from ordinary consumers. A consumer buying a laptop or gaming PC might compare brand, price, benchmark scores, or gaming performance. A data center buyer thinks differently. Cloud providers, enterprise customers, and large technology companies care about total cost of ownership. That means the purchase price of the chip is only one part of the equation. Servers run constantly. They consume power, generate heat, require cooling, need maintenance, and must deliver reliable performance at scale. A chip that is slightly more efficient can save a large customer enormous amounts of money over time. This is why data center CPUs are so valuable. Before AMD's comeback, Intel dominated this market. Intel Xeon processors were the default choice for many enterprise and cloud customers. The server CPU business was one of Intel's most important profit engines. Lisa Su understood that if AMD wanted to become a serious company again, it had to return to the data center. AMD took the Zen architecture into servers with EPYC processors over several generations. EPYC became increasingly competitive against Intel's Xeon lineup. AMD emphasized core count, performance per watt, memory bandwidth, and total cost of ownership. Slowly, customers began to take AMD seriously again. This was not an overnight shift. Enterprise customers do not change platforms casually. A cloud provider or data center operator may test a product for a long time before committing. Reliability matters, software compatibility matters, vendor support matters, existing infrastructure matters. So EPYCs did not instantly take over the market, but it gave AMD something it had not had in years: a credible path back into one of the most important markets in computing. That mattered because the data center is the foundation of the modern digital economy. Cloud computing, search, streaming video, online games, enterprise software, e-commerce, and artificial intelligence all depend on massive server infrastructure. If a company can win in the data center, it is competing for some of the most valuable technology budgets in the world. This is where AMD's two strategic priorities came together. First, it needed high-performance chip architecture. Second, it needed to apply that architecture to growth markets like data centers. Zen and EPYC connected those two goals. At the same time, AMD still had its GPU business. The ATI acquisition nearly dragged AMD under, but in the AI era it became a long-term strategic asset. AMD still had graphics technology, GPU engineering teams, and the ability to build accelerators. That mattered because AI changed the value of GPUs. For years, most people associated GPUs with gaming and graphics, but modern AI training and inference rely heavily on parallel computation. GPUs are extremely useful for the matrix operations behind deep learning and large language models. Nvidia dominates this market, especially because of CUDA and its mature software ecosystem. AMD is not starting from the same position. It has strong hardware capabilities, but it still has to compete in software, developer tools, libraries, and customer trust. Still, AI chip demand has grown so quickly that many customers want alternatives. Cloud providers do not want to depend entirely on one supplier. AI companies want more availability. Large technology firms want more negotiating power and more supply. This gives AMD an opening. After 2023, AMD pushed harder into AI with its Instinct MI300 series accelerators. Major companies including Microsoft, Meta, and OpenAI expressed interest in AMD's AI chip ecosystem. This does not mean AMD has caught Nvidia. Nvidia remains the clear leader in AI accelerators. CUDA is a major moat. Nvidia's software ecosystem, data center systems, and developer familiarity are difficult to replicate. But the AI accelerator market is not exactly like the old CPU market. AMD versus Intel in CPUs is often a direct market share fight. If AMD gains share, Intel may lose share. AMD versus Nvidia in AI accelerators is different. Demand for AI compute is enormous, and supply has often been constrained. Many customers simply want more high-performance chips. If AMD can deliver competitive products and improve the software stack, it can win meaningful business without needing to destroy Nvidia. In other words, AMD does not need to become Nvidia overnight. It needs to become a credible second source for AI compute. That role alone could be very valuable. AMD also expanded beyond CPUs and GPUs through its acquisition of Xilinx. Xilinx was a leader in FPGAs, or field programmable gate arrays. These are programmable chips used in communications, industrial systems, automotive applications, aerospace, defense, and specialized acceleration workloads. FPGAs are different from CPUs and GPUs. They can be configured after manufacturing for specific tasks. That makes them useful in applications where flexibility, latency, and specialized processing matter. In 2022, AMD completed its all-stock acquisition of Xilinx in a deal valued at about $49 billion. The structure of the deal was important. AMD did not simply pay tens of billions of dollars in cash, it used its own stock. Because AMD's share price had risen substantially during its comeback, its stock had become a powerful acquisition currency. This is one of the advantages of a rising stock price. When the market believes in a company, that company's shares become valuable, not only to investors, but also as a tool for acquisitions. AMD used that tool to buy a company that expanded its technology portfolio and gave it a stronger position in adaptive computing. After Xilinx, AMD was no longer just a CPU and GPU company. It had a broader portfolio across CPUs, GPUs, FPGAs, data center products, embedded chips, and adaptive computing platforms. So what actually explains AMD's comeback? It was not one miracle, it was a series of difficult decisions that compounded over time. First, AMD survived long enough to make another technical bet. Many companies do not get that chance. Once financial pressure becomes too severe, the company loses talent, customers, and credibility. AMD came close to that point, but it did not disappear. Second, AMD became a focused chip design company after spinning off manufacturing. That decision gave it flexibility. It allowed AMD to work with external foundries and focus on design execution. Later, as TSMC became the leading advanced foundry, this flexibility became a major advantage. Third, Zen restored AMD's CPU competitiveness. Without Zen, there is no modern AMD comeback. Ryzen rebuilt consumer confidence. EPYC opened the data center door. The architecture gave AMD a foundation it could extend across product lines. Fourth, EPYC gave AMD a real position in the data center. The data center market brought AMD closer to the most valuable customers in technology. It also shifted AMD's image from a budget PC chip maker to a serious high-performance computing company. Fifth, the old ATI deal gave AMD a path into GPUs and AI accelerators. The ATI acquisition was painful and expensive, but it preserved an option. In the AI era, that option became important. And sixth, Xilinx gave AMD a broader portfolio for specialized and adaptive computing. That does not mean AMD has won the final game. Intel still has deep customer relationships, manufacturing ambitions, and enormous industry resources. Intel is investing heavily to rebuild its process technology and foundry strategy. It has not disappeared. Nvidia still leads in AI accelerators and has a powerful software moat around CUDA. AMD must compete not only in hardware, but also in software, developer tools, ecosystem support, and customer confidence. This is what makes the semiconductor industry so brutal. No company can live forever on one successful chip. A great product may buy a few years, but the next architecture, the next manufacturing node, the next packaging technology, the next software platform, or the next workload can change the competitive balance. The public often sees only the launch event. A company releases a new processor, a benchmark looks impressive, a stock price moves, it can feel like the industry changes overnight. But behind every major chip breakthrough are years of engineering work, capital investment, supply chain planning, customer testing, and strategic risk. AMD's EPYC processors, Intel's Core architecture, Nvidia's CUDA ecosystem, and modern AI accelerators were not built in a few months. They were the result of multi-year bets. That is why chip companies are so difficult to manage. Leadership has to decide what the world will need 5 years from now, invest billions of dollars, hire the right engineers, commit to an architecture, and hope that the market arrives in time. Sometimes the bet is wrong. Sometimes the bet is right, but too early. Sometimes the technology works, but the ecosystem is not ready. Sometimes a competitor makes a better move. AMD's story is not the story of a company that always made the right decision. It overpaid for ATI. It lost ground to Intel. It nearly ran out of options. It had to sell and split assets. It was written off by many investors. But it kept enough technology, enough engineering talent, and enough strategic focus to recover. That is the real lesson. AMD began as a second supplier in Intel's shadow. It became a serious CPU challenger. It nearly collapsed after trying to become both a CPU and GPU company. It survived a dark decade. It rebuilt itself under Lisa Su by returning to high-performance computing. It used Zen to regain CPU competitiveness. It used EPYC to enter the data center. It used ATI's legacy to stay in the GPU and AI accelerator game. And it used Xilinx to broaden its future. AMD is not a perfect winner. It is a survivor. And in the semiconductor industry, survival itself is a powerful achievement. Because if a company survives long enough, keeps the right talent, and makes the right technical bet at the right time, it can return from almost nowhere. That is why AMD is worth studying. It is not just a chip company that benefited from the AI boom. It is a company that kept returning to the table after almost being pushed out of the game.